Hello and welcome. You're tuned into CNBC-TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Nigel, and I'm going to give you a daily dose of commodities, cryptos, and currencies. Before we get to that, let's kickstart the conversation with, our guests. Let's take a closer look first at the global markets before we kickstart the conversation with our guests who are lined up. Wall Street saw gains during Wednesday's trading session. The S&P 500 and the Dow, both of them posted their first positive session in three. They rose roughly around 0.5 to around 0.6% respectively. The Nasdaq Composite, that was a relative outperformer overnight. That ended with a gain of close to around 0.9%. And more importantly, it hit a record high close. Well, those gains were spurred by optimism around the artificial intelligence trade, which sent Nvidia stocks up by close to around 2%. It briefly became the first public company to hit that $4 trillion in market capitalization. Stock futures, though, a little bit subdued. So let's see how the U.S. markets do. But stocks in Asia Pacific, they are trading mixed. The Nikkei has closed with a cut of around 0.4%. The Shanghai, though, that ended higher with a gain of close to around 0.4%. While back home, the Nifty is managing to hold on to the 25,300 odd mark. It's down in the red, but it's protecting lower levels. Remember, today we have the Nifty weekly expiry as well. So that's what will add an element of volatility towards the end of today's trading action. That's about the equity markets. But let's focus on oil. Oil prices dipped as the latest tariff announcement by US President Donald Trump were perceived by market participants to threaten global economic growth and demand for the resource as well. The moves come as the market weighed rising OPEC Plus output against the geopolitical risk and the US supply dynamics. Remember, the OPEC Plus is set to raise production again in September after approving a 548,000 barrel per day increase for the month of August, completing the unwinding of the voluntary cuts and expanding the UAE's quota. However, gasoline and distillate stocks fell by close to around 2.7 million and 825,000 barrels respectively, reflecting solid fuel demand. Well, we've got a couple of guests on the show, so let's discuss all things metals, crude. We have Jörg Kiener, the MD and CIO at Swiss Asia Capital, who joins us on the show. Hi, Jörg. It's been a while since we spoke. Thanks a lot for joining in.
Hello, good afternoon.
Since we briefly touched upon crude oil prices, let's get your view out there. Over the weekend, what OPEC Plus said is they're going to be releasing an additional supply into the market. So one would have thought that crude oil prices actually will trend towards the $60 per barrel mark. However, to a surprise, it's actually moved up a little bit. What are the trends you are seeing in the crude oil markets? What are your expectations from the OPEC from here on? Because whatever they cut is almost come back. So tell us more.
I think, we never have really that much spare capacity in the universe. I think the producers are cutting whenever they goes basically to the low 60s. So I wouldn't really believe there's so much on that. And I think, crude prices are as well driven by expectations. So you have economic growth or you don't have economic growth, trade rules, taxation rules, and to a large extent as well, money. And when I talk about money, it's interest rates. So a lot of people are looking for economic weakness and maybe a cut in interest rates. And then all of a sudden, your commodity prices have probably a nice bid and you're going to look more at prices going into the high 70s.
Oh, high 70s. So you're expecting crude oil, you're seeing the worst in terms of the crude oil price decline is behind us. Is that correct?
I think you're going to have a lot of volatility in this transition period. So I'm giving you a relatively wide band because expectations on what's really going to happen tomorrow morning is changing almost every day. So you're going to get higher volatility. The derivative market is actually the swing factor and the traders and the quant people. And so we're going to have basically about a 20% range of trading within that market.
So on the upside, high 70s. On the downside, where should it base out at?
Low 60s.
Low 60s. Got that. All right. So that's about crude oil prices. That's out of the way. Let's focus on copper. President Donald Trump spooked everyone yesterday. He went ahead and said that copper tariffs are going to be at 50%. That's much higher than what the street was working with. So give us a couple of numbers if you have that. What are the dynamics in terms of
I think if
US
you look,
imports of copper, and how does it affect the global dynamics?
the market is totally dislocating right now as US buyers are front running the trade of taxes. So you see in the US much higher copper prices than you see in the rest of the world, and that by a large margin. So how long is it going to continue? And if Trump tomorrow morning comes out and says it's going to be half, maybe you're going to see some profit taking. So the price differentiation globally is huge in copper. It's much larger than even in precious metal and in silver. With the key difference that the premiums in gold and silver are in Shanghai, but on copper it's in New York. So you can see that despite everybody thinking, oh, we have China demand, the tax structure right now is not really a demand structure which is driving the price and the purchase levels in the United States. It's really taxation.
What are you making of demand, though, on the whole for copper? I think a lot of experts on the street believe that copper could outperform other base metals. Your reading of it?
Look, I think in the commodity space, the first thing which always moves are precious metals. And as you can see in a good gold move, you see now the silver market has broken out and probably has another breakout. Copper is normally the next, and then you get everything else. So copper is really a good indicator that actually the whole commodity market is turning. And so you still have a lot of other laggards in the commodity market, which are still basically rock bottom. And I think the whole sector is on the turn.
All right. Since you briefly touched upon gold, what's the verdict out there? One trigger for all these precious as well as base metals has been a softer dollar, which is good news, right, for pricing. How do you see gold prices move from here on? What is your estimate by the end of this year? Where do you see it headed?
I think the trend is still up, and the trend is up because of the dislocation of the world, because of geopolitics, because of war cycle. But I think the next move of the gold, which will move it probably in the short term, even over 4,000, will be interest rate weakness on the short end in the United States and higher long rates. So the spread between the short and the long end are going to widen, and that's really bullish for gold.
All right. So by the end of this year, if I have to get a level of gold prices, should be 10% higher from here on?
Look, it's easy to be somewhere between 3.8 and 4.2.
All right. 3.8 to 4.2. That's in the next 12 months?
Yeah.
Interesting. But, Jörg, if I remember correctly, you have a very optimistic view on gold prices. And maybe in the next, 12 months or so, we see it move to around $4,000, $4,200. But in the longer term, you believe even from there, it can double? Is that correct? Give us the kind of factors that are at play.
So one of the key factors is global geopolitics.
Yeah.
And you see basically that the BRIC countries have been building up their own system with the interrelated BRICS pay system, which requires 40% gold backing. And that's continuing basically to ask for additional gold in the coffers. Do you trust somebody else with your money anymore? Do you trust being sanctions everywhere? So if you look, most people are underinvested in gold, not necessarily in Asia, but particularly in the West. And if you look at the United States, an average portfolio today on a global asset location has 0.3% gold exposure in it. So let's believe they just get to 5, which would be about where they used to be in all previous cycles. There's a long way to go. Even if you double related exposure, your demand will continue basically to take whatever is available in the market off the market, which means the market is relatively short. In addition, you see central banks continue to buy by default as we monetize gold back into the financial system. And so you have a put underneath the price and you have a demand cycle which doesn't want to stop.
Interesting. One wonders how much more we have to go with regard to the central bank buying. But gold has clearly taken a share out of, the dollar, in terms of global asset allocation. Also, since we're talking about gold, one debate is that silver, though more volatile, it could probably do better from here. While the other view is, no, that differential will continue to hold. And that ratio that is much talked about, 60 to 70 times, if you look at the gold to silver prices,
Yep.
that may not be seen again. We should be getting used to the new normal, which could be 85 to 95. What's your take?
So if you look at gold, gold used to be a highly levered product in the world. And as we've been monetizing under Basel III and basically our deleveraging, the price has gone up. On the silver side, that's not the case. We haven't really had a monetization issue of silver coming back into the market. And if you start seeing actually that we have today about 1 billion ounces short in the market, which are trading like mad, that's basically 1.2 years production, and we're trading almost every day the yearly production. Then you actually know we have a casino price, and the casino price is very fragile in a world where you don't know if you get delivery or not delivery. So Mr. Trump is imposing taxes or no taxes. I don't think he will do that on silver, because it's basically a foreign exchange cross. But it means anyway that more and more people will take delivery, and that puts pressure on the short structure in the market overall.
Interesting. So if we give a level to silver, what would it be?
Look, I think it's been now consolidating for a long time, around the $36.50 mark. I think it could be very quickly at 38 to 42, and maybe testing the old highs, 50 by year end. That would be actually quite a nice achievement.
$50. So you believe in the next 12 months, $50 is possible on silver?
That you're able to test basically the 2000, the 1980 high and the 2008 high. Yeah, it's about $50. Why should not gold go as well to higher levels?
Indeed. So we go by what you're saying, then maybe gold goes up by around 20% from year on, but probably silver could do a 35% move.
I think if you look at palladium and platinum, which have been as well been killed the last few years, you've seen how fast they've been moving these last few days. And silver can do exactly the same. It's a tiny market. It doesn't need much money. So very easy money actually to make higher prices would be in the silver market as a sector, which is a bit bigger than the palladium and platinum market.
Since you spoke about platinum, and it's been, for someone who bought it 10, 12 years ago, they're not made any money. But if someone who bought it a few months ago, they'll be quite happy. Has it run its course?
I'm not quite sure about that, because it comes back to geopolitics. I mean, until about 3 months ago, 4 months ago, Russia exported most of the stuff almost everywhere around the world. Russia is stopped exporting to Western countries to a large extent, and they are as well adding it to the balance sheet of the national bank. And so they do the same then with gold. They basically keep stocking some of the product back home, and it means the market will be tight. So the market could actually go for quite a few years to go if people start as well investing, like in gold and silver, as well in palladium, platinum, the two other precious metals in that universe.
All right, Jörg, before I let you go, if I could push you a little bit to tell us what is the level you're looking at on the dollar index? Getting into, as he took office, President Trump took office, we had the dollar index dance away to around 110. And now it's cooled off to around 97. Even this tariff news is not affecting it too much. There is some underlying weakness that we're seeing in dollar index after a while. What kind of a band you'll work with?
I mean, the dollar index is it's a crazy index, really, right? You've got 3 currencies making the index in the world, which has how many different currencies and distributed around the world with very different economics. So it's actually a meaningless index. And people shouldn't always look at the dollar index where it goes to value actually where gold is going. But if you think that the dollar index is the opposite to gold, then you need to have on that ratio a lower index versus gold. Where it's going to be against the euro and the pound at the end, I mean, who knows? I think higher interest rates might mean that the dollar might at one stage have an opportunity to outshine, particularly if the European crisis continues economically. And in Japan, you already see that the bond market is actually flipping on the long end, which could mean you could get to the short term a slightly stronger dollar. But I don't think that will last, because your capital investment cycle, which we have now with America First, will mean that my amount of debt is going to grow significantly. And I think the dollar will not do well in that environment either.
Got it. Okay, all right. Appreciate you joining in here. Thanks a lot. Look forward to chatting up
Most
with you in the
welcome.
time to come. Gold prices, you're extremely optimistic on that. It could move up by more than 20% in the next 12 months. But in the years to come, it could probably double from there as well. Silver as well, could play a bit of catch up after being a rank underperformer. That could be set up for good times as well. And the fear from an India macros perspective is that, in fact, the crude oil prices could have bottomed out at around 60 and could be looking to test higher levels. Thanks a lot, dear, for joining in.
Most welcome.
Well, time to slip into a short break. Up next, we'll have Ajit Khurana, the founder of Reflexical, who will be joining in to talk all things crypto. Stay by for that conversation. Welcome back. You're tuned in to the Big C. As promised, let's turn our attention to crypto prices. Remember, Bitcoin overnight made a fresh all-time high. To help us out with what's the trajectory ahead and how does he see things shaping up, we are joined by Ajit Khurana, the founder, Reflexical, who joins in on the show. Hi, Ajit. Good to see you in. Thanks a lot for joining in. Well, last night, crypto started moving again and the Bitcoin just surged. If I look at the flows as well, there were flows that came in. Purchases from public companies, I believe, outpaced the ETF flows. Tell us, how do you see things shaping up here?
A large number of corporates, predominantly in the US, have a lot of treasuries which they hold in cash and cash equivalents. Some of them, and this is only a trickle at present, have started taking exposure for their corporate treasuries into Bitcoin. And this number, given that the total size of the crypto market is only about $3.5 trillion, this number can be scarily large, and that is where the excessive buying action is coming in from.
Interesting. So if you had to put a guesstimate to it, the size of the market from here, as you mentioned, can go up substantially. From where we are, say in the next few years, where can be headed? And how much of that could come in from corporate treasury purchases? If you could give us your brief analysis about it.
Yes. So luckily you have allowed me a medium-term horizon, because short-term prices, frankly, in a highly volatile asset like Bitcoin, beyond anybody's capability. I think in the Trump presidency, which we have a couple of years left so far, a high of 280K, currently we are at 112. A high of 280K is my guess. I shouldn't call it prediction because I'm not a financial advisor. Having said that, I must say that there's a decoupling between Bitcoin prices and the prices of other cryptocurrencies. So while the market cap on the whole is going up, the market cap of Bitcoin is going up disproportionately faster. That means the action is in Bitcoin. As far as corporate treasuries are concerned, by the time Bitcoin hits something like a 5 trillion market cap, of which it is currently around 2, I think by that point of time, the corporate treasuries themselves would account for about 20%.
Corporate treasuries, all right, got that. What about the Congress? They're getting closer to passing the crypto legislation. How do you see that impacting, pricing? And a few years ago, people were very skeptical about crypto. Now there is that want, there is that need, there is that allocation as well. So how big a trigger is that?
I think there are two contradictory triggers. On the one hand, for the people who found that there was something dodgy about crypto, such legislation, regardless of whether it's draconian or liberal, actually presents a legitimization of the asset class. On the other hand, regulations tend to be stricter than the current state of the liberal market that crypto is encountering. And as a result, the present participants, with the increased AML, transaction monitoring and KYC requirements, would feel a little more stifled. Net, I think it will cause a great boom in the market.
What about, give us your sense on the ETF flows? That's as well been picking up. Yes, we just spoke about how corporate treasury, flows have actually outpaced that. But how do you see the ETF flows? Because, that's what could be the longer driver, for the next few years. So your take.
Absolutely. If you look at the Western markets, the way index funds tend to be the backbone of the stock market, because they keep increasing in size, buy the index stock and just hold almost forever. ETFs are emerging as a similar play when it comes to cryptocurrencies, because they largely only buy. They don't sell, primarily because of retail interest. Even today, I think that since complex strategies are not available in ETFs and we have only plain vanilla buy and hold ETFs, we aren't seeing the sort of future that more complex exchange-listed products are likely to bring in when they are permitted by the regulator.
What is the risk factor, though, to this entire crypto party that we're seeing? It's not for the faint-hearted, as I've seen in the past. Something that was $110,000 can go down to $80,000 very, very quickly. Though you have already told us in the next few years, by the time Trump is done, you see the number closer to around $300,000. But according to you, what's the big risk?
So, the 110 to 80, frankly, is not too much of a drawdown by Bitcoin or crypto standards. Bitcoin has, in its 15-year tenure, seen 3 occasions of 85% drawdowns, which means we're talking of like 20. I don't expect that to happen, but just to give you a historical perspective, there are 2 risk factors. One is the extreme volatility, especially for people who take leverage, is just wipes you out to liquidations. Retail investors, anybody who is listening, please avoid leverage unless you really know what you're talking about. The second risk is in trying to get into these, what we could call the penny stock of the crypto market, because you feel you have missed the bull run of Bitcoin, so why not capture the bull run of an upcoming Bitcoin? I have hardly ever seen that succeed. It almost always fails. So be very careful in going into the micro caps and the nano caps.
Indeed, but besides the Bitcoin, is there any other cryptocurrency that looks interesting? Obviously, not for the faint-hearted, as you're warning us as well, and retail should be careful. But you want to give us a couple of, others besides the Bitcoin?
Yes, with the disclaimer that I may have positions in all of them. I think Solana is good, Ethereum is good, BNB seems to be doing very well. Polygon, which is, an Indian unicorn startup, is also now getting resurrected. Ton, which is the Telegram Open Network, could emerge as a dark horse. These are the ones I like.
All right. Appreciate you joining in. Thanks a lot. We look forward to chatting up with you rather soon. But interesting chat as always. Thanks a lot for joining in. Well, so that's what we had with regard to the crypto space. Probably much better times ahead. Over the longer term duration, they could do well. It's not for the faint-hearted. But be wary that in the past we've seen drawdowns, not 50, 60%, even an 80% drawdown or something that was seen on cryptos. But we're done with your daily dose of the big C, cryptos, currencies, as well as commodities. Thanks a lot for watching.